Hit it.
It's Friday, November 1st, 2024, episode 251. I'm Patrick Serezna.
And I'm Kevin Muir. This week, we welcome back to the show Leonid Mironov, PACAT China expert and new author of the Panda Perspective Substack. We revisit his calls from earlier in the year, talk about Chinese assets going forward, and find out which stocks he likes best. Then Patrick gives us his spooky technical analysis in Talking Charts.
And folks, we might even drink some beers along the way. But Danny, hop on here, buddy. Oh.
So for those that are just listening, Patrick and Danny have gone full into the Halloween spirit.
Absolutely.
And are wearing the outfits.
Oh, dude, now I know why November 1st is the Day of the Dead out here in Mexico. Literally, I can't even drink beer anymore. I gotta just stick to water.
Patrick is drinking his water, aka vodka. And Danny, what are you?
Well, just in case nobody asked about who I am.
Who are you? I love the hair.
I'm 1970s Patrick.
Oh.
Did you not get it?
Yeah, I do. It's you got the great glasses and hair. That's I love it. And you're in the studio too. I love it. It's
exactly. I thought, why not? Take the initiative and become 1970s Pat. So today I'm drinking Guinness.
Oh, very nice. That's the beer of choice. All right.
That's it.
All right, let's give us some side effects here, buddy, and let's get to...
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include margin call meltdown, derivative dizziness, and tech stock tension.
Oh, very nice. All right, let's get to the guest.
It's our great pleasure to welcome back to the show Leonid Mironov, the research lead and co-manager at PACAT Asset Management and the author of a brand new Substack, Panda Perspective. And it's exactly what you think. It's all about China. Leonid, thanks for coming back on the show.
Thank you for having me, Kevin.
It's a great time to have you because one of the things is you were on 6 months ago, and at the time a lot of the things that you predicted in terms of what would happen in China have actually come true. So why don't you kind of revisit what you were saying and talk a little bit about how you see things playing from here?
Yes, Kevin, that's right. I was here before the third plenum, and at the time we were talking about, third plenum is going to be a big deal. They're going to announce all these big policy decisions that are kind of inevitable, and everybody's going to sleep on it, right? And then it will go on for a while, and then at some point it'll click, and the market's going to rally, and it is going to rip your face a little bit, right?
Right.
And it's exactly what happened, right? And if you listen to the show we did, that's basically what you and I talked about. And I keep emphasizing to people that, look, yes, there is an awful lot going on in China, but really everything you needed to know happened earlier in the year, right? From the point at which the government and Xi Jinping himself have kind of acknowledged the issues in the economy and focused on changes to policy, right? You and I spoke of hookah reform many a time, right now,
right.
And various other big reforms. The ones on the financial side of things, the ones on pensions, the ones on anything to do with letting people, bringing more flexibility to the labor market effectively. These are the big drivers of China that will be meaningful drivers going forward for the next 3, 5, maybe even more years, right? And what happened that was somewhat unexpected and undercovered is that there was continued deterioration in the Chinese economic performance, right?
Okay.
And that they had to address more quickly than maybe they anticipated. I think the expectation within the Chinese government has been to do this, what I call immaculate stimulus, right? I mean, a stimulus that doesn't cost that much, does an awful lot, and all it really does is changes perceptions, right? And as people's perceptions change, expectations change, they kind of rally the market, revalue assets, and bring in investment. And they kind of tried to get it done, and it sort of kind of worked, because people say that, like, China is up and down, and didn't do quite so well. It's up 30% in just over a month, right? I mean,
Right.
it's still like the move. It's been a monster move, right? And if you look
Yeah.
at some of the indices like Shinext, it's up over like 50 something, 52, 53, right?
Right.
And the move has been very significant, and there has been a phase change in Chinese markets. Like, I've been tracking this for the past 7 days. We had more than 2 trillion of RMB in turnover across Chinese exchanges every day, right?
Right.
And that's roughly double the run rate of before. There is an awful lot of Chinese domestic savings being channeled into the market, right? And so that part has worked, right? I mean, the verbal stimulus of sorts has worked. Now, where it ran into a snag was at the NDRC press conference in the middle of October. And NDRC is the former planning commission that's been rebranded, right? And
Okay.
it's National Reform and Development Council, right? And
Right.
effectively the planning body, right? And the planning, obviously, you can imagine planning bureaucrats not exactly on board with all this hype, right? So,
Right.
it went exactly as you think it would go, right? I mean, sweaty bald dudes sitting in front of all the people, and
Hey, you shouldn't be talking about me like that, Neil.
nothing wrong with that. No, but point being that they were just unprepared to deal with public scrutiny of the work. They never had to, and it was always them reading a readout to a very welcoming journalistic public, right? And for the
Right.
first time in God knows how long, it was an actual press conference where people were asking, look, all this money, all this stimulus you keep talking about, where is it, and how much is it going to be, right?
Right.
Now, the thing about the NDRC is it's an important body, but it's got no decision-making power, really, right? I mean, all the big decisions are being done by the National People's Congress or its standing committee. And National People's Congress meets in March every year, and the standing
Right.
committee meets occasionally, right? And so there could not have been a change in things like deficit norms, right? I mean, these have to be passed by the NPC. There couldn't be a change in like stimulus policies outside of regional stimuli, because again, needs to be passed to the NPC. They couldn't
Okay.
upsize the bond offerings, because again, needs to be done at NPC level. They can
Yeah.
say that we would like to do all these things, or would like to shuffle some of the earnings, or bring forward some of the spending, which is exactly what they did. They basically did all they could, but given the power that they have, they basically brought forward about 250 billion RMB in bond issuance, right? Which
Right.
it was a disappointing number for people, because they were looking for numbers in the trillions. But actually, all this is everyone getting on board and maxing out what they can do before
Right.
the NPC can then formulate a grand strategy, like a grand pivot or whatever else you want to call it, of Chinese fiscal policy in the 24-25 sort of era, right? And
Right. Like, to me, when I looked at it, it seemed to be like they announced this big change, and then everyone got excited about it, but it didn't, in terms of details, come quickly enough. And then all of a sudden, all these kind of, rats on acid type traders were like, oh no, that's not quickly enough. And now they pitched it. But to me, the big difference is that Xi is underwriting this, move. And
spot on.
once he's publicly announced this, isn't it a case where, like, whatever it takes, he's going to get it done?
Exactly right. That's exactly the point that we made before. And this is the point I keep coming back to. There is absolutely no change compared to what we talked about in the summer in that regard. The big man has underwritten the stocks effectively, and he needs the market to go up. And, if you invest in China, you're in the same boat as the CPC for now, right? And that to me is the biggest bullish sign there is in that regard.
Right.
We had a long exchange on X with Louis and some other guys, right?
That's Louis
And,
Vincent Gav. Yeah.
yeah.
Yep.
And there are a couple of funny memes coming out of it, but the one I made was very straightforward, right? I mean, it's the gymnast meme where C's told you to buy, just buy China. That's it. You don't have to
Right.
overthink. You don't think about the numbers. Don't think about the stuff. Whatever needs doing will be done. Now, again, it'll be done at bureaucrat speed in some of these instances, right? I mean, they will the NPC's first meeting is now, right? So them making a change now is the fastest they can do it. But of course, relative to, like you say, rats on asset traders, which is a great line, and I'm going to use it. But relative to that, of course, it's not soon enough, right? I mean, of course,
Right.
you'd like it may be in a more flexible political environment. Potentially people would have gotten together quicker. There would have been an emergency meeting or whatever else.
Right.
But in China, it doesn't work like that. An emergency meeting is bad in itself. You don't have an emergency meeting until and unless you absolutely have to. And that means
Right.
like an earthquake of staggering proportions or something like
Right.
that. In fact, there was a Politburo meeting in September, which wasn't supposed to be talking about the economy and did, in fact. And that was what kicked off the rally, right? And
Right.
that was so unexpected that I think maybe even the Politburo members were like, maybe a bit too strong, right? And
Right. Well, I think the other problem of it from a purely trading perspective is that they did all this during their golden holiday. And I guess I don't really understand being a Westerner, but they just stopped trading for a week, right? Like the markets just shut. And so this had happened right before it. So we had all of these securities that were trading, but there wasn't really it would be almost like the New York traders going away for Christmas, taking a week off, and then everyone continuing to trade S&Ps.
Yeah.
But the reality is that the main liquidity providers of those S&Ps were all on holidays. So we had the situation where a lot of these securities were trading at, just stupid levels in terms of expectations, right?
Exactly right. And also we had all the reports of like Shaolin monks coming down the mountain to open a brokerage account and like, all,
Is that a true story? I didn't realize that.
there were kind of some pictures being circulated of two guys in the Shaolin robe sitting, filling out forms in the GF Securities office, I think. And it's like stuff like that, right? Of course it gets people excited, right? I mean,
Yeah.
like I did some work, and Deutsche Bank also have put out some good numbers on this. There is about 80 trillion 80 trillion RMB of net cash in bank and wealth management products in the Chinese system right now, right? Which is basically one market cap of the whole market, right?
Right.
And that's just sitting there, earning very little interest, right? And as that really is the driver, right? I mean, forget about everything else, right? If Xi finds a way to channel all that stuff, and believe me, he will, right? And that's
Right.
kind of the beauty of, and also the danger of the system, right? I mean, if he wants to get something done, he will. It might take some time, but as that saving pool gets transferred into the equity market, because it's already like the bond market has got its fair share of inflows, and they don't need any more, right? I mean, in fact, they're concerned about the bond yields at this stage,
Right, because they're too low, right? They're
low.
in essence almost, getting the balance sheet recession that Ku always talked about in Japan.
Exactly right. So now they're working on channeling all these things into equities. And I mean, what can happen to a market that size when it basically the inflows is double the market cap, right? Because don't forget that the float is not 100%. So relative to float, it's even higher, right? And I mean, it's a move like that will be very violent.
One of the things that I learned from chatting with our buddy Louis there that I wasn't aware of was that how upset G was about the corruption that occurred in the wake of the 2008 stimulus. Meaning that when we had all this stimulus and we had the Chinese market exploding higher, there was a lot of corruption. And to some degree, a lot of what he's done has been to kind of wring that out of the system and to kind of correct those problems that we occurred. And I was always kind of concerned or not concerned. I was always confused about why it took them so long to finally do the fiscal stimulus. Like why we were sitting here going, why aren't you doing it? Why aren't you doing it? Can't you see your stock market's in trouble? Can't you see your economy's in trouble? Why aren't you doing it? And I guess what I didn't appreciate was this fact that he was trying to make sure that he didn't have that occur again. Do you think that that's still at the top of his mind? And is that the correct analysis of why he was so late on the stimulus?
That's why we love Louis, right? Because that's exactly spot on. I would only add that it's not just the 2008 crisis. I think one of the reasons why Clinton administration of the 90s, right, was so comfortable in relaxing WTO requirements for China to get in, right, was precisely because they saw the direction this is all going to take. The system is going to get very, very corrupt very, very quickly because it's already well on the way, and it's
Yeah.
going to rot quite quickly. So, whilst the public thing was like, the capitalism will breed democracy, the underlying mechanism behind it was corruption, right? I mean, everybody's
Okay.
going to get really, really corrupt. The party's sort of iron spine is going to rust, and it's the soft underbelly, we can get through it, right? And
Right.
then they weren't far off, because if you look at China in 2011, that's basically kind of what happened. Like, most of their foreign investment was basically into the bank accounts of big party leaders and their family members. I mean, not most, but a lot of it, right? And
Yep.
you had malinvestment across the board. Like, wherever you look, it was all driven by corruption. And I think the 2008 financial crisis response just was the cherry on the cake, right? I don't think that
Okay.
was the thing that was troubling Xi. It was, as he came up through the system, that's what he saw around him. And let's give
Right.
him credit for not getting corrupted quite in the same way as everybody else. And well, not everybody. Of course, we say everybody, we don't mean everybody, but
Yeah.
enough
No,
bad
of course. Yeah. Right.
enough bad apples in the system where it clearly became a threat to the system. And that's
Right.
why he became his number one for policy priority became fighting corruption. And that's why, like, as an oil and gas guy, right, I've monitored the cleanup in the big state oil companies very closely, and they had people shot for corruption, right? I mean, because
Right.
it was so endemic.
They had
and so
people
big.
shot. Is
Yeah.
that what you said? Oh,
Yeah.
really?
Yeah.
Oh, wow.
Um,
Here, you get a slap on the wrist if you bid for a company, just when you get high and with your girlfriend and you bid for a company publicly, you just get a slap on the wrist. And in
Yeah.
fact, you might even get a higher market cap later.
Indeed. Out there, not so much. And the parts of the oil and gas value chain were quite public, because these are high-profile statespeople, right? And
Right.
but the cleanup happened on most party levels, and
Okay.
people will say, well, there's still corruption, and there's still this, that, and the other, and I guess it's, you can't root it out completely because it's human nature.
Yeah.
But relative to the pathway they were on in 2012, it's day and night, right, in terms of corruption. And which is again why I remind people that yes, sometimes they take a very hard line on things like bankers' bonuses recently, right? It was like they limited it at 400K US a year and no more, right? And
Right. Okay.
okay, well, maybe that's a problem for some, for sure, but more importantly, what they're trying to get at tends to be a particular aspect of the industry, right? And here they're saying, look, we're about to start shifting money into the financial space. Let's not let people just steal it all, right? I mean, let's leave enough there for the people with savings, and let's let the financial system not absorb,
Right.
all the money, right? And again, not to kind of defend them, but more to explain their thinking, right? Whether it's right or
Fair
wrong,
enough.
we
Yeah.
can, we can debate. But more importantly, the thinking there is not ignorance of the market, but rather thinking that other things are more important at any given time, right? So,
Right.
like, for example, in like 2016, they focused on cleaning up H&A and conglomerates like that got sort of overstretched and over-levered, right? And you don't hear about those anymore. But in 2016, if you look up what people were saying is going to blow up the world, it'll be things like that, right? I mean,
Right.
all this hidden Chinese debt through Chinese corporates buying assets overseas that,
So do you think this idea that he had to stamp out all this corruption and almost, push his foot down on the neck of the markets is gone, and now he definitely has one goal, which is to have a kind of sustainable bull market ahead of him for financial assets?
I think maybe phrasing it as his main goal is a sustainable bull market is maybe taking it too far.
Okay.
But yes, I think if in one word, yes, but nuance comes from his goal is internalizing demand. I think what has become clear to him over the past couple of years is that demand is an asset. It's not exactly evident from the economic thought that, you read about, like, in terms of Marxist view of factors of production, or in terms of even, because you really look at the top economic brass in China, and none of them are really Marxists, right? I mean, those
Yeah.
are Chicago-trained economists, most of them, right?
Yeah,
And
right.
so, like, but in their view as well, demand isn't really an asset per se. But I think, and this is kind of what I think you and I agree with, maybe conceptually, is that monetary theory actually had uses, right? I mean, maybe the prescriptions might not have been exactly spot on, but understanding the way that money is created was exactly
Right.
right, and understanding
Yep.
that the risks of this money creation are actually lower than you'd think, right? And that the correct answer to COVID was in fact stimulus, right? And that,
Right.
yeah, you can argue how much stimulus, and you can argue how to distribute it and how to minimize corruption and all that stuff, which is all
Right.
true. But substantively, as a policy direction, stimulus was the right answer
Right.
because it creates demand, and your companies can rely on that demand, and therefore you don't have to bail out the companies. Instead, you create
Right.
demand that then bails out the companies. And this has become quite apparent to the Chinese guys, because now that export has become a very significant growth driver this year, right? I mean, about a
Okay.
third of all growth is export growth. And it depends on which metric you look at, but like headline, around about 1.3% of around about 4.8% annual growth should come from exports. That sort of number range. If that export avenue gets shut down to you quickly, and you look at the European policy proposals that they've put together to limit Chinese automotive makers' access to the European market, you look at obviously Americans never letting those in, right? And
Yep.
even places like Brazil shutting down for Chinese steel, right? You can only externalize demand for so long, right? And it's
Yeah.
becoming more evident and clear, and that in it then becomes the focus, to have a domestic market where savings aren't wasted on bank accounts,
Yeah.
and that this money is being used either for investment or for consumption, and
Right.
which in turn allows companies to make money domestically and reinvest domestically and grow domestically, right? So by hook or by crook we got here, right? I mean,
Yeah. And one of the things that I kind of that I look at when I see a lot of us Westerners talking about the Chinese stock market and its its prospects, I think we're focused too much on whether we're going to get Western money to flow into China, and I don't think that's really important. I think we're an aftershot, thought of them, and it's really to your point, this internal thing that we're doing, and we're just going to go along for the ride, if anything, right?
It's exactly right, but it's
Yeah.
the number that I mentioned earlier.
Yeah.
If you have 10 trillion US sitting on the sidelines of domestic savings, right?
Yeah.
Do you really care about the incremental couple $100 billion from overseas investors? Maybe to
No.
kick it off or whatever. Maybe as like a reminder that they're also for foreign investors and whatnot. But
Right.
the role, like, there's actually a very interesting paper about Pakistan recently to show that foreign investment boom in Pakistan in 2015 in fact caused a net savings decline in the economy, right? Because the locals sold to foreigners and didn't invest themselves, right? And like the net investment was actually lower despite the foreign investment boom. And I feel like we're almost at the exact opposite of that situation, that even if foreigners pull out every last cent, it's the domestic investment boom that will drive this forward. And I don't think that the foreigners are going to pull out the very last remaining cent. In fact,
okay, so let's talk about that a little bit. There's a famous Irish, although he lives in Scotland, economist that is being very vocal about the fact that you can't trust the Chinese with your assets, and that eventually they're going to have to devalue. What would you say to somebody that looks at the total amount of debt and says that the Chinese is in a situation where they're going to have to default and not default through inflation, in essence, because their financial situation is so precarious?
I would say, have you looked at the other side of the balance sheet? Look at net position, not just the debt, right?
Right.
Firstly, and then now that we're talking about it, right? I mean, the current valuation of these assets is also not super high, right? I mean, the actual value of these assets, which is again coming back to why the asset rally is important, is because it brings up the asset side of the balance sheet, right? I mean, so both local governments in China and central government of China have a crap ton of assets. Sorry, but like they own an awful lot of stuff, right?
Yeah.
So if it really comes to it, crown jewels can be sold off, right? I mean, now of course they won't. The indebtedness of the central government is really low, right? And the demand for Chinese central government debt is exceedingly high, right? As
Right.
evidenced by the dropping yields, which go basically halved over the course of the year, right?
Yeah.
The capacity to borrow and to fix, especially the local government debt position, is there, right? And I think
Okay.
this is the next big thing that they need to do. Instead of focusing on, I feel like before we were saying they'll never do anything, and now they're saying it's not enough or it's not right. The application
Right.
is not in the wrong place. I feel like all these conversations are a bit spurious. We went from the central government not caring about this stuff to caring a lot. Now that they're caring a lot, they'll get it done. Now,
Yeah.
does it mean that all the policy proposals that come out now are spot on? Probably not. They never are, right? I mean,
Right.
they'll have to refine and fine tune and all the stuff. But directionally, we're going from government not caring, not investing, and continuing with this real estate driven financing model to a brand new model, which is demand driven, right? And greater demand, greater tax intake from demand sources. Great. Really good for everybody in the long run. If we can shift to that, it's fabulous. In terms of trust in the system, I feel like, it's one of those things, right? Where, sure, you can argue that this particular person or that particular person is not entirely on board with you making money. Sure. But then also you look at stimulus, right? You look at what drives a particular policy agenda. And here, like I was saying earlier, you're in the same boat with this government. Maybe 30 years down the line, they feel like they've built whatever, a perfectly socialist society, and it's great, and they don't need the financial markets anymore. That point is very far away, and I doubt it'll ever come. And again, I remind everybody that maybe it's the Communist Party in name, and people like saying that Xi Jinping is a Marxist. I personally don't believe that. I feel like he is a bureaucrat, first and foremost. A bureaucrat that was tasked with the a labor of Hercules, almost level performance in cleaning up those muse, right? They really clean out all the crap that accumulated in the economy in the run up from the 90s and 2000s. And like, I understand that in terms of maybe quality of life of individual foreigner in the country, it was much easier during the corrupt years. No question about it, right? I mean,
Yeah.
I appreciate that, right?
Yeah.
It's just that's not what the economy needed even then, and certainly not now, right? And
Right.
so and they're doing what's needed, right? And I have full confidence in them delivering on the stimulus. I have full confidence in them delivering on reform, and therefore, hence the Substack, basically, right? I mean,
Right.
I'm so confident. I'm happy to go out there and tell people that.
One of the I recently had the good pleasure of meeting a hedge fund manager that specializes in Asia, and he has a partner who's actually she's boots on the ground, and she's talking to a lot of the Chinese kind of well-to-do. And one of the things that he communicated to me was that the overwhelming kind of attitude amongst the kind of Chinese, I don't want to say elite, but let's just say well-to-do upper kind of entrepreneurial sect is, how do I get money out of China? Like, how do I get my kids out of China? How do I get money out of China? Do you agree that that is the attitude that is, prevalent amongst that group? And do you think that this is enough to change that, this kind of change in the leaderships, no longer cracking down as much and actually kind of focusing on growth? Is that enough to stop that outflow of capital and brains?
I think there are sort of a number of separate dynamics here that all need to be looked at separately. On the one hand,
Okay.
this very question you ask me now is the one I've been dealing with since maybe 2010. And people like when everybody was saying, look, all the Chinese are taking the money out of the country, all the smart Chinese, all they want to do is buy a place in Vancouver or somewhere in Australia or wherever else, right? And like
Yep.
all the Chinese money is always leaking out of the country, which it just has, right? I mean, and for the really wealthy Chinese guys, right? I mean, they know that there are risks. And if you are anywhere near the Forbes list, you say something wrong or do something wrong, and you go into re-education program, which you might not enjoy, right?
Right.
So absolutely, there's an entire class of people in China that always thinks of making money and then running for safety of sorts, right?
Okay.
But that class of people isn't that big, numerically speaking, and a lot of them have had money outside of the country for a long time. And this is what we talked about in the last show as well, that the actual stock of Chinese money overseas is actually really substantial. And
Okay.
there's been positions built up in US real estate, in US stock market, in wherever you look, there's Chinese money waiting there, which is the most important parameter for them, though, is FOMO, right? And as Chinese domestic economy starts picking up and somebody else starts making money instead of them, these people tend to come back and try and get reintroduced back into the economy. And I
Now,
think,
can I jump in there actually? Because
yeah.
one of the pushbacks that I've heard is that this is an argument that the Chinese bulls will make. They'll be like, once the Chinese stock market, starts to rally, then the money will come back to China. But didn't these people spend an inordinate amount of their capital to get it out? Like, doesn't it trade at a discount to get it out in terms of it costs 20 to 30% to get it out? Like, isn't once that money gone, it's not coming back to China?
Look, again, coming back to 2013, it must have cost you like 8% when you go to Macau and pretend to gamble your money away
Right.
and then win it back, right? That was 8%. Through transfers out through Bitcoin and things like that cost you 5 maybe percent plus market volatility, right? I mean,
Okay.
and in fact, you might have made money if you know on Bitcoin going up if
That's
you
right.
held it for a little bit. So I would not worry too
So
much.
you're saying you can get your money out, you could actually quite easily. It's not an issue. Like the leakage isn't as controlled as I might envision.
Look, I said it in 2017-18 that Bitcoin's main purpose is getting money out of China, as far as I'm concerned. That's literally
Really?
the only economic use that the thing has, and it's worked back. But I mean, China and also other places that have a closed
Yep.
capital account, but really China is the one that you care about, right?
Yeah.
And it's just a fact of life. Right now, everything is a lot leakier. It's much harder to have a closed capital account now, right? It's much
Okay.
harder to limit people. Now, of course, during times of crackdowns, it costs more, it's more difficult and all the stuff. But, nevertheless, it's still there and the options are on the table. Now, again, some people say it cost me, look at me, it cost me 15% to transfer my money out of China. And I'm like, all right, well, tough. What can I say, right?
Yeah.
It costs you 15%. And I know some people that it costs 0, right? I mean, and it's just somewhere in the middle lies the cost of it, which is probably whatever, under 10%.
So you think the money will come back? So you think that argument is false? The argument that the money won't come back because there was a cost to get it out.
So let's think about what kind of money is out there, right? I think the biggest driver of the balances growing is actual export revenues not coming back. And export revenues not coming back is a very important factor that the government will reverse, right? Exporters will get the memo and they will start repatriating exports back. This money is definitely coming back. I have no concerns about that.
Do you think that the yuan is headed higher then?
Yeah. Not only is it heading higher, I feel like if Trump wins, I am a subscriber to Lewis' theory that there's going to be a Mar-a-Lago Accord that he calls it, that similar to Plaza Accord, with a yuan revalued at a higher rate, right, and fixed there for a while, right?
Yeah. Can I just jump in there, because I not only do I agree that will be kind of one of the things that happens. If we go back and we look at what Trump did to China in terms of 2016, he changed the whole attitude towards China. And then the Democrats actually kept all those policies in place. I could see a situation where even with, Harris as the president, there's a, it won't be called the Mar-a-Lago Accord, but there could be another pressure for the yuan to rise. And it could be one of those things that almost the yuan goes up no matter what.
And that will drive yuan flows because, again, you have to remember that a lot of these guys, even if their money is exported and they go to Vancouver for a couple of years, a lot of them want to go back, right? I mean, it's just
rains all the time there.
Yeah, it's not for everybody, right? I mean, and it's important to also remember that there are other more subtle maybe mechanisms. So, for example, they introduced a 20% tax on overseas profits, capital gains, right? So
Yeah.
before, as a Chinese citizen, you could just export the money and don't worry about it, and they wouldn't worry about it either. Now they're saying whatever capital gains you have, ship them back, right? And it's 20% now. Who's to say it's not going to 50, right? I mean, it's if the policy is to get money back, they'll continue pushing to get money back in all sorts of measures, right? And not one of these measures potentially is the one that drives money back, but it's coming back, right? And now
Do you think
within
that
that
Xi
money,
do you think that Xi wants a higher one, or do you think he wants to leave it low to try to allow export to continue to gather share?
I think that's the battleground. I think enough people. So it's interesting, right? That in this recent policy announcement flurry, right? We had a time when the PBOC has cut rates and the yuan went up, right? It's like, all right, well, that's an interesting signal, right? And then we had a change in interest rate outlook by the Fed, and yuan went up, right, as well, right? So you're like, all right, well, clearly the market is telling us something there, right? I mean, yuan wants to start moving up, and the exporters are, when we were doing work on competitiveness of EVs in Europe, for example, right, it's quite clear that the Chinese producers' costs are structurally lower, right?
Yeah.
And these numbers, so for example, in an environment where yuan is headed to 6 to a dollar, right, why bother with the tariffs as far as the Europeans are concerned, right? I mean, wait for the revaluation of yuan, and you have an evening out without the challenges of a trade war, right? And I feel like that's the that's a big argument in Chinese parts. They're saying, look, if we don't agree to revaluation of yuan, well, we'll get taxed anyway or tariffed anyway. It's like it's so much simpler to just let it happen. And yes, it might not boost exports immediately, or or help the exporters, but it helps the population, right? They're the biggest
Right.
importers, and that in itself should be a pretty popular policy domestically.
Isn't this though the problem that they saw with Japan in terms of when I guess it was the 80s when they got pressure to revalue the yen higher? And didn't China look at that mistake and say, we're not going to fall for that again, and we're not going to.
The question I would have is, was that the mistake, or was have you read Princes of the Yen, Richard?
No, I
Dorner's
have
book?
not, but lots
Who
of
I would
people
recommend.
have. Yeah.
Oh, it's phenomenal. But like, if you follow that argument, the problems didn't really have that much to do with the revaluation of the yen, and a lot more to do with the way the domestic monetary policy was run, right? And
Okay.
it's, I feel like arresting those problems and not having window guidance for like the number of or volume amounts of loans to be issued to domestic corporates, and just having a reasonable monetary policy reaction to macroeconomic pressures will help sort of along the way. Plus, also,
So the
I feel
mistake
like
wasn't the revaluation. The mistake was how they dealt with the revaluation.
and reaction to it. Yeah.
Okay.
And
fair enough. Okay.
the other
So you know what? We've been talking a lot about like how this is played out. Let's get to some of your calls in terms of where do you see the opportunities going forward? Obviously, you're a China bull. What's kind of your preferred way or things that you're looking at in terms of from the long side, and any kind of particular nuances you have in terms of your positions?
Gladly. So in my latest review, I wrote about how hard it is to find a decent China index. Right? It's like there just aren't any. You're making compromises one way or the other, right? And so there isn't an S&P to just buy and forget, right? I mean, that's
Okay.
just that's just not something available to foreign investors right now, right? So if you can find a good China manager and let them do the work, right? Because I mean, I would recommend myself, obviously, but others are available. But I think the stock selection process becomes really quite interesting, right? And this idea of understanding who is exposed to the biggest drivers of the next move. So, for example, I think the green and EV-based sorry, anything electrification based really is going to continue being the big recipient of government funds, right? If the government's putting the funds, take them, right? I mean, and I mentioned CATL, for example, on our last chat, and I still love it, right? I wrote a big piece about them. I think CATL is a phenomenal company that will eventually be the biggest company in China. It's actually the second biggest China listed company already. So, it leapfrogged quite a bit, and it's going to catch up with all the other ones, right?
So this is the battery maker, and since we're talking about batteries, why don't we kind of revisit what's happening with the car makers, and do you have any change of opinion in terms of what's happening in the global car making industry, and your perspective?
Like I said last time, the Chinese march forward is at this stage an inevitability, right? It's a question of you are genuinely selling a better product for less money, right? So absent tariffs, absent limits on your ability to sell into the countries, Chinese automakers will continue gaining market share elsewhere, and it'll take some time for Americans to catch up. I think most recently the Ford guys have been quite public in saying that, look, after our most recent visit to China, we can acknowledge that they're way ahead of us, in most aspects, right? In terms of electrification in general, China is doing a really good job. But what it's highlighting is that what we anticipated the minimum level of infrastructure to be is actually much higher, right? They have a much more developed grid, and now they realize that as more and more things get electrified, the pressures on the grid are higher still. And on the other hand, as you introduce more renewables into the grid, that is good because a lot of it is cheaply generated power, but unless you have an efficient way to store it and ship it across the country, it's kind of get wasted, and again adds more pressure on the grid. And they continue investing, and that to me is a sign that Europe and America also, if they're serious about getting electrified at some point, would need to come up with similar capex programs for their power grids as well. In terms of autos purely, domestic stimulus will come first and foremost in the shape of auto credits, right? There's been an announcement today that the Shanghai government is expanding their subsidies for new EV purchases. They're doubling it, right? I fully expect that to continue. They'll probably going to expand the Cash for Clunkers program as well. So that first leg of subsidies will likely be EV related. So I'm a big bull on all things EV related, and in fact, that's the focus of my writing for the next couple of weeks, is covering every individual one of these companies and seeing what's what.
Isn't there just too much supply though, on terms of like the EV companies? Like, isn't really like, what do we have, like 105 EV companies or some crazy number like that in China? And don't we really need like 10?
Well, you had 300 until recently, right? I mean, 240 this time last year. Now we're down to like 120, 130. There is a very natural sort of animal spirity, fairly high profile
survival of the fittest,
survival of the fittest, survival of the best technology. Like the company that I like a lot, Li Auto, for example, right? I mean, they're the only ones that make these range extended electric vehicles, the gasoline battery type things. Their technological advantage is quite clear, not advantage, but their technological selling point to non-Chinese markets is very clear to me, right? And so when something like this becomes available in the Middle East, in Central Asia, in Latin America, right? I mean, it's easy for them to pick up sales. Like, if you have no differentiating characteristics, of course you then go to the lowest possible sales number, and then volume players win. But if you do, then of course you can have a nice niche market all to yourself, and these niches become quite big. Like Li Auto is doing 500,000 sales this year, 550,000, something like that, probably about 720,000 next year. It's already quite a big market. Like Mazda makes about 1 million cars a year, so like just Li Auto's niche in China is sort of Mazda sized. So all of a sudden,
there's room. Can I jump in here actually and ask you another question? Because if I'm not mistaken, you are a little bit of a commodity guy. And you mentioned the plug-in hybrids that Li Auto did, and I've recently kind of come to know this palladium/platinum story, and the fact that we had, with the move to EVs, we had this kind of huge demand shock in terms of reduction on the demand side, and a lot of these palladium went below the cost of production or the marginal cost of production.
Mm.
And now that we have a situation where these plug-in hybrids are actually gaining popularity, if I'm not mistaken, these things actually take more platinum or palladium than a pure ICE car, or at the very least in the same
They
amount.
certainly take
Yeah,
palladium as opposed
yeah,
to EVs that don't. Yeah.
right. And I was wondering, do you have a view on palladium or platinum? And are you a bull? And if so, how do you play it?
Well, I own SBSW,
Okay.
which has been which has been tough. All right, I mean
Yeah.
the thing is up 10 or 20% and then down the same amount at any given day, right? And
Yeah.
it's a rough ride. It's not for everybody, but. Nevertheless, you've described it exactly right. That I think that the death of catalytic converters is grossly exaggerated, and platinum as palladium will be important. Now, the thing against platinum is that diesel going away is a sort of is a bigger risk, right? Whilst we talk about plug-in hybrids still using some of the converters, it's true, but gasoline engines use a lot less of it than diesel engines, and Europe
Okay.
is the biggest diesel user in the world, right? And it's Europeans who are much more keen on converting away from diesel. So I think platinum is in a worse shape in that regard than palladium, but like conceptually, yes, it's not as bad as maybe like zeroing demand from autos in 10 years or whatever, but rather just a slowly managed decline over time.
Is the palladium below the marginal cost of production as well?
It's not. If it's not, it's not far off at these
Okay.
rates. Although it had a bit of a bounce recently.
Yes, it did. It all of a sudden gathered the attention of everyone, and I had meant to write it up, and then I kind of fell down, and next thing I know, it's running, and Zero Hedge is talking about it. I'm like, I can't talk about it now. We'll wait for everyone to get bored with it again, and then I'll look at it. But is there a way to play palladium? Like, you can obviously go out and buy the metal, but is there a specific stock that would work for palladium?
Well, again, all right. You look at some of these South African or Zimbabwean players, and it's again, I would just say that it's not for everybody. There is a stub. There's a company called Zimplats. There's a stub. It's 10% equity stub. It's been there a long time.
Yeah.
It's listed on the ASX, and that's. I mean, it's good luck buying any because the liquidity isn't really there, and the holders.
I
don't
think
really
they're
wanna
going to
let it go.
actually. Isn't that the one that they're going to spin out the rest of it?
Let's
I believe,
see,
anyways.
right?
Okay.
I-
Okay. So
I-
what
I've
else?
Been, I've been waiting for something to happen to that stub for a very long time, and so like my entire career, in fact, and nothing has so far. So I'll believe it when I see it.
Fair enough. Understood. Okay, so what else do you like here? Give us, we're gonna have wrap up shortly. Give us your, what else should we look at as trade ideas from here on in?
I think, like I mentioned, electric vehicles, Li, Neo, both look great. I think on the consumer end, whilst the consumer side of stimulus might take a while to come through, but I would look at chains like Haidilao, like
What's the symbol
Luckin
or the
Coffee.
number on that? Like, give us some symbols.
Well, let's go Luckin Coffee for former LK, and now it
Yeah.
trades in the pink sheets. Well, after the sort of all the troubles that they've had, but they've relaunched themselves and they're quite big and going pretty well. I would also look at some of the big data companies in China, right? I mean, there's an awful lot of moves in the data space, right? I mean, just there's this company called Beijing Vast Data, and they deal with trades for Shenzhen and Shanghai stock exchanges, right? So
Yeah.
effectively, it's almost a play on the turnover on the exchanges, which is again not something you hear of every day, but it's there for people, right? And it's what should I call it? It's there are very interesting things happening in almost every avenue of the Chinese market, and we don't. I think there is just a general perception that it's Baba or bust, right? And I feel like that's the completely wrong way to play this market. The thing to do. China is a much smaller country in general. There are a lot more smaller and medium-sized enterprises that are very interesting, right? Because they haven't had the PE roll-ups, they haven't had the mergers and acquisitions boom, right? I mean, it's all small and medium-sized, like 5 to 10 billion US companies that are making sort of waves and making interesting products. So. And coming back to the numbers, 6862 is a Hai Di Lao ticker in Hong Kong, and LKNCY is the Luckin Coffee ticker in US. Are the two consumer names that I like. But quite frankly, there's a lot. There's a lot going on, and in electrification, for example. The makers of transformers for example, like they talk about how data centers need high quality power, right? That it has to be like a consistent way of supplying power. Well, that actually means that wires, it means that the transformers that are employed to supply this power all need to be a specific type and specific kind. Most of those things are made in China, and like the wiring company Ningbo Oriental Wire and Cable, phenomenal companies specializing on wiring power from wind farms, solar farms, and into these sorts of usage cases. And then, all the transformer makers, they all look great. It's a fascinating market, and there's just so much going on.
That's it reminds me of that scene in Top Gun when Maverick said to Goose, "It's a target-rich environment," and even I might be able to find a lung that works in that environment. Leonid, it's been a real pleasure having you. Before we let you go, why don't you tell people a little bit about your firm and also your Substack?
Well, Pacat Capital Management is a Hong Kong-based asset manager. We manage China long-only money, and we have an Asia-Pacific long-short. For all your institutional investor needs, by all means, get in touch. Ever since appearing on your show earlier, I had to bat quite a few questions about China. So I figured the easiest way to deal with that is put those answers in a Substack form, and then people were nice enough to offer to pay for it. So it is now a paid-for publication, and I thank each and every one of the subscribers, and I encourage more people to subscribe, because that's where I generate ideas and talk about the market. And like I say, it's electrification month this year, this November, and electricity month in December as well, where in November I'll be writing about car makers, and in December about all the auxiliary firms that exist in China. Join in. It's my full name.substack.com.
That's right.
Mironov.
So it's leonidmironov.substack.com. It's called Pandas Perspectives. Go out and check it out. Leonid, thank you so much for your time. I always appreciate it, and thanks for staying up late for us.
Thank you for having me, Kevin.
Take care. All right, Patrick, it's time for talking charts.
Let's do it, buddy.
What's going on? What's going on?
Absolutely. Well, we'll get to it, but let's talk about the top 3 things we are watching. One, does oil make new lows? I actually loved this price action in oil. The fact that the reaction was obviously so negative on the retaliation in the Middle East.
Yep.
And the market didn't follow through selling. It just rebounded completely. That to me is all the technical characteristics of support and basing. I've
been saying it all week, Patrick. I think that there was no World War III. Geo nerds puking into the Monday low opening was the low. I've been saying it. I'm sticking with it. I really think
I'm with you.
All those geo nerds.
We're Gucciing it.
We are Gucciing it because we both agree. Very rarely,
and we're both
agree.
And we're both actually not just in agreement, but we're all heavily positioned in this
one. Well, I'm not heavily positioned. It sounds like you are more than me. So I apologize for Gucciing your big trade, but I do think that
everyone needs to be warned that when me and Kev both are on the same trade and both high conviction, that rarely does it work.
But I really do agree with your analysis that you got up that kind of Sunday night or then Monday morning, and all those hawks that have been saying that, you got to own oil because there's going to be this World War III type invasion, full invasion of Iran. It didn't happen. They all gave up on it. It was kind of the cathartic, just get me off, just get it off the sheets, kind of giving up. To me, it would have been nice for everybody to open even lower, but to me, you take what you can get. I think it's headed higher. There's no more geopolitical angst in that you have to worry about coming out.
Listen,
the other way.
My only thing is, we'll talk about the elections in a moment, but I still think that there's enough headline momentum on a Republican sweep that could see the oil turtle head the previous low just to wipe out the stop losses below. But I still believe it's a low. But I'm just saying that there is room for a lot of volatility into next week.
Okay,
And that,
fair enough. But I
and
do think, Patrick, that a lot of the good news, Trump is going to win, therefore you should short oil. It's already in the market.
it's
I think
in
those
the
people are-
market, but there's always the reaction function, just the same as the $4 drop after
Okay,
the
fair enough.
retaliation, right? Like,
Yeah.
I'm just saying there's room for volatility where you can't have a tight stop loss going into the election.
Oh, so I'm with you there. And although I do think that the low is in, I'm prepared to live with new lows and just to continue being long.
Yeah. So number 2 was jobs numbers, and they look, they came in obviously weak, but the bigger question, which is I don't know the answer to it, but how much did the hurricanes have to do with it? Or
The
was it
hurricanes were
really
huge. And I think that the reality is, with the numbers in front of the election, the hurricanes, nobody's caring about this. Just nobody cares. I think it was a non-event. We had it as number 2. We probably shouldn't have.
The market rallied, and the market.
I don't think the market rallied because of that.
Yeah,
You think?
I mean, no, you know what? It just happened to be the headline that was out at the time when the stock market started to strengthen.
Exactly.
And so it could have contributed 40, 50 points. It could have. Like a weak number like that means that the Fed will have a little bit of a dovish tilt. At least speculation is like the market's
I don't think the market's actually reacting as well to the Fed as much as everyone thinks it is. Anyways, all right. What was number one?
Earnings, and
these were a big deal. We did have some big Mag 7 names that definitely did some interesting stuff. Let's just put it that way.
My view remains the same, which is that the Mag 7s needed to actually beat to keep this market going. Me and you had a chat on Wednesday with another group that we talked about this topic, and I'm gonna just continuously reinforce it. Like, the breadth of the market deteriorated based on earnings, and we'll share that chart here in just a moment. But the thing for me.
I'm sorry, I'm having trouble taking you seriously. I look into the screen and I see you. I'm sorry. And in some ways, I actually feel like I take you more seriously. Like, it almost seems like, I should be more kind of,
absolutely.
Yeah.
Absolutely.
Okay. Sorry. I didn't mean to interrupt your
all I'm just saying
knowledge
is that in order knowledge, is that what we call this?
Well, I was going to call it rambling, and then I good word.
Thank you. Call it what it is. All right. Where my rambling is correct. It's not knowledge. But in the end, for me, in order for these markets to have broken to 6,000 and really get going, it needed the tailwind of a bunch of the Mag 7s, not all of them, but a bunch of the Mag 7s breaking out. And while Amazon certainly, was one out of them that worked out, the majority did not. And that is a drag on the markets, and a lot of really big questions. All right, so let's quickly cover the top 3 things to watch next week. Now, number 3 was one that you contributed, European financial plumbing, and I'd love to hear what's your thoughts here, because I don't
usually get involved with the top 3, but I was like, I had to jump in here because I do think that there's some stuff happening in Europe. You go look at things like the UK gilts went no bid for a little bit again, with the recent budget. But more importantly, one of my smart subscriber buddies highlighted to me that the French oats, like the 10-year bond or note, trading versus the European swap, that's actually widened to the widest levels since the European crisis. And I think that I know there's some people that have talked about this, and it's not like we haven't discussed it. We had Vincent Deloard on the show, and he highlighted this French issue in terms of a potential widening of these spreads being a problem. But I think that yesterday, we're taping this Friday, but Thursday, it really felt like for the first time, or maybe it was Wednesday, I can't remember what day it was, but that we had some kind of plumbing issues. We started to see some issues in the credit market. And I've always said that everyone focuses on the stock market, and a lot of times they don't realize that the stuff you see in the credit markets are it's ahead of it. Like it
Yeah.
eventually works its way into the stock market, but originally the problems always, start up in the credit markets. And so I'm watching that really closely because it feels, Patrick, like it's one of these things under the radar, not behaving well, potential problems going forward. I don't have an actionable trade idea from it except to say that it's concerning me.
Well, something that I've shared on this show for well over a year, going back to the middle of 2023 when everyone was even super bearish. One of my arguments, and I don't think you ever pushed back on it, my argument was that everyone's looking to the US for the recession and the problems. But my view has always been that this time around, the problems start outside of the US, and like a contagion inevitably will impact US. But those that are looking for the problem to emerge in the US are likely to be disappointed. Whether it's, you've always been quite bearish on Canada, but problems in Europe and issues abroad like China, all these different things, are even like the yen carry trade unwind. Like everything, in my opinion, is going to be all about issues abroad, and it will spill into the U.S. Speculation and a call that I made, and I still think that, like this plumbing thing you're talking about could be exactly that. Like something could break in Europe, and suddenly the markets are just going to start to care.
Yeah.
And so it'll be interesting. You know what, the European plumbing was not on my radar. Thanks for bringing it up. I think it's an awesome thing to keep
And
a close
can
eye.
I just comment briefly on what you said in terms of the problem won't be in the US? And I think you're correct that I have been in the same boat, because I think that the US has done a lot of fiscal and the economy will prove stronger than everyone expects. And if it is going to be an issue in the US, I don't think it's going to be an issue of a deflationary problem. I think it's going to be a problem of an inflationary problem,
Mm.
meaning that we actually get a
Well,
situation. I know
I
you just threw up
I
in your
think
mouth. I know,
I
I know.
know, but I think it was from the drinking last night. That's just
Hard to tell whether
hard.
it's kept calls or Patrick's hangovers. Which is it? No, but I do think you're correct that a lot of people that have been looking for deflationary collapse in the U.S. are mistaken. Now, having said that, Patrick, I did see that a very prominent Canadian economist slash bear is giving up on his kind of I love bonds and the U.S. stock market is going to go
Rosie?
down. Well, I didn't say it, but it was one of those things, Patrick. You get these guys that are kind of capitulating and worried about bonds. It almost makes me bullish bonds. Like if they were
I'm bullish bonds, so we'll talk about that in a second. All right, let's go number 2, FOMC. There's going to be a rate cut, but the question on my mind is we went from before the FOMC pivot in September, where everyone was so fucking dovish, and they were pricing in 8 rate cuts by the end of next year.
Yeah.
And the last FOMC was literally a buy rumors, sell news event, and everyone just hammered bonds, and yields went ripping right after the event. You've got all the Stanleys
Well,
and
so I would argue, Patrick, that the reason they hammered bonds, and you heard Stanley Druckenmiller,
Yep.
he said,
you've made the argument too.
they hammered bonds because the Fed was so dovish.
Yeah.
So I might kind of give you some pushback on that. It was all
Yep.
built in. In fact, I think the Fed was overly dovish, and that's why they hammered bonds.
Anyway, point now
Yep.
is the rate cuts this year have already been priced in, so the Fed's going to give the market what it's already baked in.
Right.
But the question is, will the existing will Powell kind of back off from the overly dovish tone, or will they still commit and saying the economy needs it, we're staying the course? And will the 2 years start to turn again? Everything took a break here in the last 4, 5, 6 weeks. And so the bigger question is, will we once again see this FOMC be a pivot?
So I don't think they're going to pivot. I said
No,
for
not
the
pivot, but like, do you
no,
think
I
that they're
know
going to
pivot
change
towards back towards a more neutral stance is what you're arguing or
Yeah.
suggesting. I don't think that'll happen. I've said for a long time, and I got the initial um, rate cut wrong. I thought the Fed was going to put us on a path of 25 basis points cut per meeting, just like Greenspan and then later Bernanke did in the opposite way post the dot-com bubble when they were raising rates. They just
Yeah.
raised rates 25 basis points each and every meeting. Can't remember how many it was. It's like 17 meetings or something. It was a lot of meetings. And they just, walked that thing higher. I think they're going to walk this thing down lower. And my guess is that they're not going to do anything that's going to disrupt it. They're just going to put them on the path. And I think one of the things is the bond market got way too excited. They started pricing in increased chance of 50s. And I think that was the real problem. We're on this path of 25 a meeting. I don't think the Fed takes us off that path.
All right.
And I think they should. Like, listen,
But,
don't,
but,
I don't.
but do you have a call though on market reaction to the Fed staying the
No,
course?
because we're going to talk about number one here, which is all that's going to matter.
Okay, so number one, elections.
Yeah.
All right. Now,
and just to set this up, the elections are the day before the FOMC.
yes.
So
Well,
when-
the elections
Isn't
are
it?
on the 5th, and then we the 6th, and then the FOMC is on the 7th. So it's actually.
Oh, I'm sorry.
But
Yeah,
normally
but
it
you
is a
have one
Wednesday.
trading day in
Why?
essence.
Why did
because
they? But why did they move it to a Thursday? Like, aren't almost all Fed meetings Wednesdays? Maybe it's because
No, the 2-day meetings are generally they start Wednesday and Thursday. I think that's the norm.
No. Most press conferences are on a Wednesday.
Well, maybe they did it because they didn't want to be
The
vote. If
election.
it's a 2-day vote, if it's a 2-day event, they didn't
Meeting,
want to
yeah.
be meeting on the voting day.
Yeah, I think so.
I don't know why
So-
they didn't move it a whole week later. Like,
Yeah,
to me,
the
this
fact
is
that it's right, it's crazy.
Yeah.
It's
Yeah.
crazy. So, Kev, number one, the elections.
Yeah.
Okay. So this is obviously something that's been overanalyzed to the 10th degree. Like, it's insane how many people have made this the focal point. To me, when something is talked about this much, it's really hard for it to be a surprise. Even the surprises that everyone's forecasting have been so talked about that it won't be a surprise.
well. So I disagree a little bit there, Patrick, because I
Oh,
feel like
well-
the what everyone's forecasting is getting built into the price, and I agree with you there.
Yeah.
But there's a potential surprise
what
that
is being
won't be
priced?
what
So-
everyone thinks.
Yeah. So the big surprise, no, sorry. What's being fully priced in at this moment? You showed a great chart in one of your newsletters, just showing how much the Republican victory sweep has been what's driven the market over the last 4 weeks.
Yeah.
And so the market in many ways is already priced that in. So I think very similar to when Israel retaliated and oil moved, there's always going to be a potential market reaction the day the news comes out with the outcome that could move it. But I think that generally the market, like having a big, huge move on a Republican sweep, would not be not that high probability. I think
Right.
that
It's like
odds
they're-
are,
that's
yeah.
why we've been rallying for the past 2 weeks. All you have to
So-
do is I look at the Goldman Sachs baskets of the Republicans winners versus losers, or the Democrats winners versus losers. You plot them against the poly market Trump odds. They're bang for bang, tick for tick. They're moving together. And so this is what I've been arguing is that the Republican sweep is increasingly in the price of the stock market.
Yeah.
And so when it happens, it's gonna be no surprise. It's
not
all in there. So if
So-
there's gonna be a surprise, it's gonna be something that no one's expecting.
And so,
what
Kev,
is- yeah.
this is what you're going to share. So why don't you share what you think the market is underpricing and where that surprise can be?
Well, and just listen, I just want to say before we start here, I am
You're
a Canadian.
Yeah.
I do not have any opinion about who
Nor do you
people
get to
should vote for. Yeah, I don't vote. It's none of my business. I'm only interested in how this
impacts the markets.
affects the markets, and that's all I care about. And I'm just looking for the trade. And when I look at this, I think that the reality is the market is priced in an increasingly high chance of Trump sweeping. And so when I look at the bets and what I get paid for a bet on the other way in terms of Harris, I think there's a good chance that she does better than the market expects. And if that happens, I suspect I could foresee a situation where the stock market gets hammered, like just
Yeah.
absolutely hammered. And I think that that a lot of people, when I go and I see the setup going into this, I go into my trading groups and they're not using the words like if Trump wins. They're using the words when Trump
When.
wins.
Yeah.
And when I hear that, I'm just like, okay, like let's not forget that Hillary had an 87% chance of winning an hour before the election. So my main view is that these polls are crap. I was recently had the good fortune to talk to a data scientist that taught me how difficult it is to get a truly random sample and what that means for these polls. And I just think that we're over that the market is overly optimistic about the Republicans' chances. Even if you just think it's an even up bet, like let's just imagine that you just assume it's basically a coin flip at this point, given how much the market has run ahead in anticipation of a Trump win, it was still a good bet to
Yeah.
bet on the dark side. And that's the essence of my argument, is that I think that there's more of a chance of a downside surprise from from a Democratic win. And I will say one other thing, Patrick. Absolutely nobody, and I mean no one, thinks that they can do a sweep. And listen, I'm not a political junkie expert. Every single political junkie expert tells me there's zero chance that that Harris is going to win, and then they're going to win the Senate too. And all I can say is, given their certainty, that means that the bet is cheap.
Yeah.
That's all I'm saying. The bet is cheap.
So you can just buy some portfolio insurance on that bet, like literally
Lots of different ways to play it. Yeah.
Because if that did happen, the markets have not priced that in, and it's going to be big.
Yeah.
There's going to
And
be
the other thing is,
and,
Patrick,
it'll be bearish.
Usually we have a situation where the stock market is down going into an election because of all the uncertainty. And in fact, this has been the opposite. We've been rallying on the enthusiasm for Trump.
Yeah.
Anyways, that's enough politics.
Let's talk the charts.
Okay.
So let's yesterday we had the first legitimate big down day since August, right? Like end of August when we had that little dip. This was the first kind of big down day, long overdue. But this came right to the 50-day moving average. I don't think it follows through until after the election. So like I think this one day sell off really now will settle in until Tuesday. And the next big market move is going to be a post-election move on there. But like the reaction was clearly disappointment in Microsoft, which gapped lower. Meta disappointed with a little bit of reversal down. The overall, like, I mean, Google did gap higher, gave all the gains back. And Amazon was the kind of big one that prevailed, and it's attempting a 52-week high. So this is probably the only stock out of the Mag 7. Obviously, Tesla earlier from the other week had a big move, but Amazon's the only one that really kind of ended up being positive. Apple on its earnings weaker. And so basically the Mag 7 were not the tailwind for the market. And one thing that really came about this week was the deterioration in the market breadth. We were 2 weeks ago, me and you on in this episode, we're talking about, you were talking about how strong the equal weight index was, and how the market breadth was clearly a driver behind the advance. Well, that changed this week on earnings. So this is the breadth by looking at the number of stocks in the S&P 500 that are above their 50-day moving average. And we dropped from 85% just a few weeks ago to under 50% during this earnings, which basically means we have a narrowing of the breadth, and therefore you need the mega caps strong in order to have the stock market make any progress. You can't have the breadth narrowing and the biggest cap stocks selling. And this is why this earnings was so important for these Mag 7s. The fact that we have breadth narrowing and the Mag 7s not leading higher, I think that the market top could very well be in for the year. Now, that doesn't
Yeah.
mean that it's a bear market. It's just the highs of the year.
Well,
When there's only 2 months left in the market.
yeah.
Like this is not like some big call. The fact is the stock market's up, 20% on the year, 30% October over October, year over year. It's not a crazy call saying that it's going to take a break. And I think that with this earnings thing, that the stock market here is likely not going to hit 6,000. We could prairie dog on a Republican sweep where the market takes the first reaction positive, shoots up to 6,000, prints that level, and then it's like a prairie dog. It'll give it all back, and that will still be a top. I think when you're looking, the Nasdaq has not been able to beat its June-July high. The Russell has failed to beat its July high. The Euro stock is one big topping formation. The Nikkei has already put in its high. So you have a scenario where global developed markets are very toppy. That's my call. I think that the tops are in for the year.
You listen, you could be right. We got 2 months. I'm a big
It's not a
bear.
race.
I think that we're gonna, the Democrats have a better chance, and therefore I suspect the market's going down. And the only thing that I would say is if we do get a quick, flush of 10-20%, I think you buy it for the year-end rally. But one of the things
you think a 10-20% flush can happen in a short window that you buying?
Yeah.
I guess if the Democrats do surprise, then
yeah.
yeah.
I
Okay.
think very, very much so we could get a 10 to 20. I think we could get a 10% on the first day if we got a blue
Really?
sweep. Yeah, if we got a
Wow.
blue sweep. Listen, chances of blue sweep are really low. Everyone tells me it's 0, but so it's not like I'm expecting that and I'm making that call. But at that point, I think you buy it. I still think the seasonality for
You think we could have a 500-point down day on a Democratic victory?
yeah,
Wow.
listen, it has to be a sweep. Her winning and a split government that's not going to happen. And let's, I don't know,
I
if
might
it's
have
not
to
500,
widen my
maybe it's
spreads.
400 or whatever. But the
I have to
reality
widen
is,
my spreads. My debit spreads are too narrow for your call.
well, I just, and then I think you buy it. And then I'm bullish for going into the year end. I still think that the seasonality works. And one of the things about seasonality is that you need to remember that it's actually the small caps that do best. Everyone thinks Santa comes for the big caps. I'm not sure that's where it's going to come. I think that the pain trade for the year end would be a rally in the smalls that everyone's underexposed to. And I'm just, the only question is at what point, I'm not going and buying it today because I am nervous about the next week.
Yeah.
Right.
Yeah.
And so if it doesn't occur, then I'll reevaluate then. But I'm not as bearish as you are for the last month of the year.
Right. Well, look, if the stock market's down 10-20% in a couple of weeks on the downside, I'm not going to lean into into a bearish position down at those lows. This is my call is that the tops are in, not that there's going to be a huge bear decline. That kind of a decline you have to at some point. It would be very reminiscent of those scenarios that we've had where even at a key pivot level, the market will drop that 10-20%, but then the situation doesn't deteriorate. The market spends a couple months mean reverting that move, and then if situation worsens on the economic data front, then it rolls over for another round of selling. But if we have a quick negative move, then that could put in a low for the rest of the year, and the market will just spend the time backfilling the move. But I hate small caps, so you'll make money. No, you'll make money there because this is why oil's not going to work, because we're both long. So I'll tell you what, I'm going to do you the favor,
Okay.
and I'm going to let you have the small caps to yourself, and that way it'll work for you. You're
One of
welcome.
the
Yeah,
things
but
about the red
you could
sweep,
buy me
though,
a
that
nice bottle of scotch or something as
that
a
sounds good. In terms of the red sweep, I think that we both agree that the rally on the back of it will be muted because it's increasingly priced in. But I think where we differ is that you then think that's the top for the rest of the year. And I could see a situation where we have 2 weeks of selling off on the red sweep. So we get like a gap higher, we go up to 6,000. Maybe it doesn't make it. We then go and correct 5% on kind of an all, like, I guess all the good news is baked into it. And then we get a year end rally. I guess I'm just more of a year end rally guy than you. I think the seasonality is going to kick in.
I'm gonna wait for our episode 2 weeks from now when we actually see where the market is, and then I'll share there's a lot of ifs, right?
No, fair
Like
enough. Yeah.
like uh, if the stock market wiped out 20%, which I'm not in that camp.
Listen, I'm not,
But
that's not my prediction. I'm saying it can.
I'm just saying though that
Yeah.
if in 2 weeks from now we're 20% off the highs, I'd probably be a buyer.
No, but I'm saying though, in
And
terms of a red sweep, you're saying that the reaction to the red sweep would cement the highs for the move. And I'm saying that I think we could get another push, and I'm not as bearish as you in terms of confident that will be the end of this bull market. And
Okay.
and here's, I'll give you a little thing that I think you should watch. And I'm kicking myself, Patrick, for not paying more attention to this. I was out once at one of these, macro dinners, and everyone was asked about their opinions. Like, they say, well, what do you think the stock market's going to do? And some old guy, and if I'm calling him old, he's old, said, he said, well, I'm bullish. And everyone asked him why. And he says, because credit spreads are still behaving well. And as long as credit is behaving well and there's no problems there, I suspect that the stocks will keep going up. And I think this move, and one of the reasons that I brought up the European plumbing is because for the first time we started to see some problems in credit. But so far, in terms of the credit spreads in the US, we have seen no problems in it. And I still contend that the credit spreads in corporate US credit will widen before the stock market tops. And that'll be your sign. Okay. So we can sit around here and we can talk about whether the bull market's finished or whether there's going to be a correction and stuff like that. If credit keeps performing this well and there's no widening, then I'm not going to get too bearish. Now, having said that, if all of a sudden out of the blue, credit spreads widened, 100 basis points, or 200 basis points, then I would get pretty awfully bearish, because that's the signal I've been waiting for.
All right. Let's talk some more charts.
Okay.
So let's start with these currencies. And I want to highlight, so the euro was incredibly oversold. It bounced 109 to 110 is a typical reaction. And so we got up to 109, still below the 50-day. It'll be really, I think the elections and the FOMC are going to play the next kind of role as to what's next in the euro. But this is a prevailing downtrend now. And it would not shock me if the US dollar strengthened, causing this to drop back to the lows of the year near 106. But obviously, the problem here is that it's very hard to make any technical call on something that has this big of a randomness with elections coming up. So all we can really observe here on the charts is where things are going into the election, rather than making a big call as to what's going to happen. But the euro breaking down there will be interesting. The other one that I wanted to highlight was the US CAD. It's amazing how, I'm going to put this on a weekly chart, how much the US dollar has strengthened against the Canadian dollar right up to this 139 level. I mean, this, if it cracks 140, it might not stop till 145, 150.
Don't be butchering my trade.
I'm not in.
I'm good. I'm good. That's the best news I've heard. There's no such thing as quintuple tops.
Yeah.
Quintuple. I made up a new word there. Quintuple.
This though, I do actually have a bet on this, because my spousal support payments in Canadian dollars. So I hope this fucking collapses. It's
so we're all rooting for 160. So Patrick's
All right. Let's let's talk the asset that shall not be named.
Oh
Uh,
gosh.
uh,
Do you know what?
uh,
I was just talking to Cubby about this like as we spoke. I guess it ticked almost exactly at the highs, the all-time highs. I
yeah,
pulled it up on a Bloomberg and I was like, it ticked almost perfectly. It's like a Gandalf line.
yeah, yeah. But to me, like it finished a perfect symmetrical move on the upside, and right into resistance. But this isn't bearish yet. What happens is that when these kind of moves and this kind of resistance, it is the most common technical event for the first reaction of a support resistance line to be tested and therefore the price to reject. What's more important next is that will the bulls buy dips and defend the price action up along these highs where they'll develop like a consolidation that becomes the springboard to launch it to new highs.
Okay.
And so to me, this dip off of this high back to 70,000, if the bulls can more or less keep buying the dip and keep pressing north of 70 every time there's a little dip, and they keep it up there every if we get past the elections with it holding up there, it could still make an all-time new high.
Yeah, I hear what
The-
you're saying.
it's and
You're almost expected to fail there, is what
yeah,
you're arguing,
yeah.
right? Like it was
Oh,
almost
the
too
first
obvious for it to not fail there.
Yeah.
Yeah.
So like you can see, let's say back over here, this pattern is what you can almost expect, which is when the price first came up here and tested this high, then it consolidated for two weeks and then attempted the breakout.
And
And
then
that's
when it
and
didn't, that's then your signal that
yeah.
it's all
And so
good for the short.
I think that some variation of that can happen here.
Okay.
And so we'll watch. It's going to be really key. The other
By
one,
the way, before you finish off on the Bitcoin, that's another Trump trade.
yeah.
Like that is an asset that
Oh
is
yeah,
doing well
we
because people
if the politics turn blue, Bitcoin's going to get hammered.
could be. I'm not sure, but I definitely know that
Well,
the Bitcoin boys are definitely all in on Trump. They're talking about like having a strategic, Bitcoin reserve, SBR, not the SPR, the SBR.
oh my God. Okay.
Yeah.
That's anyway, enough about that. Okay. So let's talk gold. And I get the gold bull story. I'm super bullish long term. Somehow we both didn't goocher it by being long, but it's been a great trade. But you know what? After being good friends with you for so long, I start to get nervous when everyone is in complete and total consensus, and the consensus is that you can't go wrong owning gold, and it's very reminiscent of uranium at the start of the year. When uranium was ripping to the upside, everyone was so convinced that uranium could only keep going higher, and it began a 9-month consolidation in uranium that it didn't change the fundamentals. Uranium arguably is even more bullish today than it was at the start of the year, but the investors got too enthusiastic, things went too far, and the market needs to take a break and consolidate. And all of these arguments of, well, China's buying and the central banks are buying and all of these different things are just the stuff to give you the mistaken air of confidence before you consume some humility when the market gods do what they specialize in. And they're going to, I think gold and precious metals just need to do what the markets always do, which is they got to make investors question something that they truly believe to be true, which is that gold is going to super bullish, will only go up. The markets are going to, at some point here, run some stop losses and shake out the tree for all the weak hands to get shaken out of this trade. And the question was that $50 drop we had the other day, a short-term high? That's a big question.
Yeah. I'm not going to disagree with you, Patrick. I saw, Josh Brown, who usually makes fun of gold
He was
guys.
long.
Yeah. I see Bank of America with their 3,000 call. And one of the things that I have been saying is that this is a central bank story. When I used to say that, everyone used to laugh at me and tell me, oh no, rates are going higher, US dollars going higher. And I said, it doesn't matter. The relationship's broken. Don't look at that. And now they're finally coming aboard. And one of the things that I think is funny is that they somehow believe that the People's Bank of China is going to tell them when they're going to be buying gold. Like I saw, like it was a couple of months ago, People's Bank of China said they didn't buy any gold, and gold actually sold off. And I was like, why do you expect these guys to tell you, what they're doing?
Yeah.
They are trying to accumulate gold, not for the next, month, not even for the next year.
It's a reserve.
It's something for the next 10 years. And the worst thing that
Maybe
could happen,
permanent. Maybe
Yeah.
a permanent part of their
the
balance sheet.
worst thing that could happen for them is to have a gold bull, rip roaring gold bull market.
Yeah.
So everyone that's buying gold thinking that the People's Bank of China is going to join along and push this into a new rip roaring bull market is mistaken. So I am agreeing with you there, Patrick. And I always just say that what we need now is that they're going to walk away. With all of the West getting excited, People's Bank of China is going to walk away. And then all of a sudden, the West is going to go, hey, wait, I got no one to sell this gold to. And then all of a sudden, we'll have a $200 swoosh. All the crayon chewers will get bearish. Then all of, the Josh Browns of the world will say, I should have known better. This asset sucks. And at that point, China will come back and start buying it again.
Yeah.
So just remember who you're playing against here. There is one party that is really setting the tone for this, and they have no interest in having this be a rip-roaring bull market. And in fact, it's in their opposite interest. They want to keep it in just a steady accumulate without it getting kind of a lot of attention.
Yeah.
So I'm with you, Patrick. But the only thing I will say is that in the past, nobody liked to own gold stocks like the miners. I think that the time for the gold miners to outperform the gold commodity is here.
Yeah, I think that could be the case with silver. Let's talk about it here. So here's
Okay.
the chart. First of all, so silver broke to a fresh year high, and it's now 50% retraced the last move back towards 50-day moving average. This is a key tell because typically as it approaches what were its previous highs, right along its moving averages, this is a typical place where buy and dip traders would come in. And so silver here in the next 50 cents as it approaches 32 bucks even is going to reveal a lot, because if this gets bought on dip right in here and goes right back toward the highs, then there's some sort of juice still left in the tank, and there could still be one more impulse, and that could drive gold north of 2,800 temporarily. Like I don't want to I asked the question whether that reversal day we had yesterday was the reversal, but there's not enough evidence. One day does not make a new trend. There's no way somebody can get bearish gold based on one day. The market could reverse and be 52-week highs all over again by middle of next week. But what silver does as a support line will give us a big reveal. The other thing so back to your GDX, the gold miner scenario, look at that. We're right back to the 50-day moving average, to where all previous highs were. This is a very typical place where in this upwards channel where traders would buy dips. And so we're going to get some valuable information. Will the dip be bought at these levels? Silver's at that same point. We're going to find out whether, if we see really shitty bull follow through in the next week, then I would become more concerned that a short-term high is in. But I'm going to give the bulls a benefit of the doubt because the prevailing trend is up. And so you want to stay with the prevailing trend until it's proven that that trend has failed. And I think that the next week will give a lot of information on that. And by the way, notice how many people joined the party on platinum and palladium, and they just got hammered to a 2-day hammering as well. And they're both actually right at the buy on dip spots. And so this is why right across the board, we're about to get a huge tell. And
Yeah.
I think we're gonna I will have a much higher conviction call our next episode. When we get together in the next episode, we're gonna have another 2 weeks of trading. There's going to be a lot more information in terms of that. Um,
Free platinum and palladium. I saw that our favorite Doom and 11 site was highlighting it, and I knew it was like a screw then. Like when they start pumping it, and you're getting all that guy, Tyler is pumping, Tyler Durden is pumping it. You just know, like, oh, it's over.
it's over. It's over. Okay. I'm going to keep this shorter today. I just want to highlight bonds remain weak. You and your little group of groupies of bond haters. You guys are like the He-Man woman haters club. We're gonna call you
That is not true. We love
Yeah.
bond shorts.
No,
Love women. Have no
no.
problems.
So
We
yeah,
are
we're gonna
humanists.
we're that's why we're gonna call
We
you
just hate fixed income. We just hate fixed income. That is true.
I've never okay, so I have a name for you guys. It's we're gonna call you guys the Treasury Trash Talker Society, and I did not and I did not get the membership card. You and Cuppy, well, and your little groupies have this little society. I have not got the membership card, so I have to stick to technical analysis and make my calls on bonds based on things like crayons. But your little society is pretty convinced on this outcome. But I actually think if there was going to be a turn point, it will be on the combination of the elections and FOMC. And so this is now oversold enough where if there was going to be a bounce in bonds, it really does have the catalyst next week to react. And so I'll be very curious whether or not we see this turn.
Yeah, Patrick, you know me, I'm always short. So there has been an occasional time when I've been long bonds and I felt really dirty about it last September when the term premium bros came at me, all those guys, the QRA, when I started hearing and the Doom and 11 Tyler Durdens were explaining how there was going to be a failed auction. I actually got long bonds into that. This isn't quite as hyperbolic, but it's definitely starting to feel a little bit that way. And I don't like being a member of any, party that I'll be allowed to come to. So
I'm gonna actually now, and I'm gonna make this work. So Danny, what I'm gonna have Danny do is I'm gonna have Danny design you a membership card to your.
Well, that's good. That's nice.
It'll have the Market Huddle logo on. It'll be the Treasury Trash Talker Society.
Okay, I like it.
And you can you can pick all your guys like Dario and all you other little guys that are all in the same camp.
Dario's a big listener. He's probably listening. He's probably got a big smile on his face right now.
And so we'll get all of you guys the membership.
Don't forget cards. Louis. I got Louis. I got Vincent Deloard. I got a whole bunch of them.
We're gonna get all of them membership cards.
Okay.
And the key is I don't get one, and I'm gonna feel like the guy that's been left out. That's
awesome. I'm looking forward to it.
All right. Okay. So the one thing I want to just highlight here is the 2-year bond, and obviously this 2-year bond is a little bit different than the long bonds because your calls are all on the long bonds, right? And the 2 years far more sensitive to Fed policy, and so clearly this pulled out 50 basis points of in the last month, and you are making the call that the Fed isn't going to deviate their language. Do you think that we can go back to 3.5 on the 2-year?
Yeah, I think eventually we'll get down to 3.5.
Well, 3.5. We were at 3.5 a month ago.
I think that the 2-year has this habit of getting way too excited too quickly. And this is one of the problems with all you bond bulls is that the moment things get a little bit dicey in the economy, you run off ahead and price in all these cuts from the Fed. And I don't know how long it's going to take to beat that out of you guys. It could be a long process, but that's the real problem is that I'm dealing with kind of the the lack of logic from you guys in terms of where you expect the Fed to end up. And as long as people keep thinking the Fed's going to end up at 1%, the moment something goes wrong, you get this huge rush into the front end of the curve, and it prices in too many cuts. So I could see a situation where, like, if all of a sudden the market got iffy and we actually had a credit event of some sort, the next thing you know, the 2 year is at 2.5. Like, I could see 2.5, because the reality is that all those bond bears will rush into that thinking that that's the play. So it's one of these kind of, the Keynes beauty contest thing where you don't bet on, the who's actually the most beautiful. I know that's a terrible thing. We shouldn't be talking about that anymore, but we're going to get canceled for that. But the reality is that you're betting on who the judges think will be the most beautiful. We're going to do the Keynes dog show contest. We're going to change it to be politically acceptable.
Okay. The Keynes dog show. All right, perfect. All right,
the Westminster dog show.
There you go. So the last chart I just wanted to show was simply that Euro stock, and just to your European plumbing story, like, it really was a rough week. Where, first of all, in the last 2 weeks, there was an attempt back when we were recording the last episode for the Euro stock to break to its 52-week high towards it. And instead, the last 2 weeks started a sell cycle, and we've broken some key technical levels. Europe is definitely weaker than the North American markets, and I'm curious whether that trend prevails. And even if, let's say, there was this election surprise that caused the market sell-off, what I'm curious about is how much the European market will actually react. Will it go tick by tick, correlate straight on with the U.S. equity markets, or will it be very much a U.S. equity market move? Right, like, how will the European markets react? You have a thought, a call on that?
I have no call except to say that I'm having trouble being bullish Europe here.
No,
I really do think we're into some problems with this plumbing and this French budget and all these things. So I'm going to skip it. I don't have an opinion. All right.
Okay. Now, you know what? I'm done, Kev.
That's awesome, buddy. You were such a good trooper for jumping on here with the full outfit. Unless you didn't. In fact, is it just that you slept in that and you didn't?
Yeah,
get up
I literally was. What a great party! The Mexicans know how to work this Halloween and Day of the Dead stuff. So, like, it was a fantastic night. I slept with this on my face. That's why it's all smudged. But that's kind of works the hangover look.
Got it. All right, Patrick, where can they find more about you and your wonderful business /
Big Picture Trading?
BigPictureTrading.com.
And how about you, Kev?
They can go to themacrotourist.com. And listen, we can never have too many friends. Bear market, bull market. We're just happy to have you guys join us for the ride. Now stick around for the after show. Daniel, aka Patrick in 1970s.
Oh yeah.
So did Patrick have the big hair like that?
No, I had a mullet. It wasn't at the top. It was the
only thing I could find at the fancy dress store. I actually tried to get a Austin Powers outfit to become an international man of mystery, just like you.
That would have been actually more accurate for sure.
That would have been good.
That
would have been good. Because you got kind of a Don Henley look going here. Do you know who Don Henley is, Daniel?
Sorry.
This is what happens when we got millennials on the show, Patrick.
Yeah.
Shit, he might not even be a millennial. Watch him be a Z.
Oh no, I'm not a Z.
Okay, good.
No. He's a millennial.
So Don Henley is one of the founding members of the Eagles. He's the drummer.
Oh, yeah, Eagles.
Yeah. And so Google him, like the Eagles, and Google his hair, and you'll see that that's exactly what you look like.
Well,
Don Henley.
Who knows? I mean,
yeah.
I've seen early pictures of Pat. It's not that far off of this, mate.
Jesus.
Yeah. Do you want to review your beer?
I'd love to.
Okay, go ahead.
10 out of 10.
Now, I thought as a Brit you wouldn't like the Irish beer.
Oh.
No, it's okay. Yeah.
That's the one thing you'll accept them for?
Yeah, we're in the UK we call it black gold. That's what it is. It's pure black gold. It's
nice.
It's delicious. I'm a big fan too. I love the Guinness.
It's also the only thing I can
I
find.
don't drink much beer, but when I do, Guinness is definitely in the top 5 rotation for sure.
Yeah.
It's for me.
When we
Yeah.
were in Ireland, we took our kids there, and they had a lot of them had their first beer, or a couple of them had their first beer at the Guinness. And my middle daughter went back to Ireland this summer, and she's like, "I got to go back to the Guinness factory." She went
Smart.
with her
Smart. You raised her well.
raised them right. All right. Okay. You know what? Actually, I'm going to let you guys go because I got
Yeah.
somewhere to go. Thanks
Yeah,
for
yeah.
tuning in, everyone. We'll see you in a couple of weeks.
Yeah.
Take care, everyone.